Hello everyone, my name is Horvat and welcome to a new intraday video in which I will take a look particularly on the euro dollar, but also will touch dollar yen and DAX. Okay, so what we see today is, or for the last 48 hours, the euro dollar is showing some strength. As you know, we were looking for a reversal to the upside into this uh, three wave recovery. Okay, I was expecting this move because of a completed five-wave decline here. So actually, I think that this current rally could be temporary. I'm looking at the range of a resistance from 1.120, up to 1.1090. Okay, which is area of a former wave 4. Also here around 1030, we have equality level of wave C compared to wave A. So actually, these resistance levels could be very near. Okay, which means that current rally could be fade, but the reason for this rally is probably coming again from Greece after Greek lawmakers voted with enough votes to pass the second package of reforms for the bailout deal. Okay, so however, I'm not buying this euro strength. I'm not buying this news. I still think that situation for Greece is in a big trouble, and that any deals will have just temporary. Okay, so on the long term, I think that euro will definitely turn to the downside, and this is also not good news for the eurozone as well. So the whole situation for me is very bearish for the euro and Europe itself, no matter if we get a deal or no. So I will not definitely will not be buying any euros here. But if you're interested to buy euros, then maybe you should check some euro crosses. But at this stage, I'm more focused on euro bears to catch potential shorts here. So as I said, I think that we are now in a corrective recovery. Now this ABC is actually part of this wave 2 that can be a second leg of a new fifth wave to the downside, if you consider that big triangle ABCDE in fourth wave can be finished. Okay, so for now it's still very tricky, because at the moment the price is rising. We do not see a completed three wave structure. Okay, as you know, when you are talking about the confirming price action, you definitely need to see a reversal in your expected direction, which means test of this region and then five-wave drop in a positive fashion before you would consider maybe shorts on the euro dollar. Okay, because always when you're tracking wave C can actually show out to be wave 3, not wave C. Okay, but of course there are different type of traders, so some are aggressive, some are very patient. Anyway, I will definitely keep an eye on this area for a potential reversal to the downside, and we'll look probably for some shorts. Okay, so that's for euro dollar. As I said, we could see lower levels for this fifth wave as shown on this daily chart. So euro and DAX have no negative correlation since the ECB started with quantitative easing. So if you expect that euro dollar will continue to the downside, then definitely DAX should rally. And as you know, stocks turned nicely to the upside in the last 3 weeks or so. We have been looking and expecting this move. So if you take a look on German DAX, what's going on there? You actually see, just let me take a look on daily chart. You actually see that this decline, okay, from April highs was clearly been structured by 7 legs. Okay, 1, 2, 3, 4, 5, 6, 7. Now this is a clear number of corrective subdivisions. Okay, so this is a corrective wave, clearly. So corrections are either structured by 7 legs or by 3 legs. 3 legs are zigzags, 7 legs are complex corrections, referred as double zigzags in most cases. So, sorry. So in that case, I think that we have seen a low of a fourth wave, which was a double zigzag, and this reaction to the upside is very nice, clearly impulsive. So even if this decline would not be a double zigzag, a completed fourth wave, okay, you would still be looking for a third leg to the upside as a wave C if you think that this rally will be structured by three legs, and if this rally would be corrected, because even if you're tracking just a corrective movement, you still need minimum three wave structure. Okay, so third waves, which means wave C, 3 of an impulsive movement, or wave C of a corrective movement, are very tradable. That's why I think that German DAX could continue to the upside, and I see current prices now in a pullback mode, in a nice corrective setback, which could be a wave 2, but it can be a wave B, who never knows. And ideally we will see a test of this trend line, okay, and a 38.2% at least. Always when I'm tracking wave 2, I want to see 38.2% tested, okay. So for now, I think that German DAX have a little bit more room for this weakness, which could send euro dollar even higher. Okay, so those markets definitely are not inversely tick by tick, but generally speaking, if I'm looking down on euro, German DAX should rally. Okay, so I think that any weakness here on German DAX is temporary. Here I will update you on this one real quick. I think that we are now in wave B. I'm not sure if this wave B is finished or no, but definitely I will be looking lower. Okay, now German DAX um, usually makes really a lot of fade breakouts on an intraday basis. You will see a move into a new swing high and then price reversal. You will see move into a new swing low and then price reversal. Just take a look on this latest price action. Here was this swing low for wave 3, okay, because this the Elliott wave structure. But anyhow, if you ignore the Elliott wave structure, you will see that this low have been taken out and then price turned to the upside. Then this swing low of a wave 4 was taken out and price now turned to the downside. Now we have a gap, and I would not be surprised to see another reversal to the upside above this swing high before market return to the downside. Now this is a very typical price action, very tricky moves on the intraday basis of German DAX. Okay, this one is very hard to trade, so you really have to be nimble. But anyway, what I think here is going on is that we are in a wave B, and that we will see move to the downside into wave C. Now, always when you're tracking a corrective movement, you would expect that free wave retracement will retrace back into the region of a former wave 4. Okay, in our case, this comes in not here, but it comes in here around 11,400. Okay, so these levels still haven't been tested. 38.2% is still a little bit lower, so I think the German DAX will move slightly to the downside in the next few days. Not to mention the S&P 500, we also are looking there for a potential another third leg of decline, which could be a wave C. Just let me show this chart as well. Here you can see that I'm tracking wave A, sub wave B, and expecting wave C down. Let me take a look on the intraday chart here. So this is actually the count. Now I will update this. As you can see, I was looking for this free wave bounce yesterday. So this is wave A, wave B, and wave C. So I think that sooner or later this S&P will turn to the downside. So for short-term traders, there could be some room to make money on the downside. The validation level is clearly identified here at 21.25. But keep in mind that this is against the larger trend, which is clearly up. So any risk taken on the short side should be considered in a smaller size than compared to any bullish trades. Okay, so I'm looking for this wave C to the downside. Same on German DAX. So euro dollar could see a little bit more bounce or at least sideways price action. So until I see a completed correction here on S&P or DAX, it's very hard for me to go short euro dollar or long US dollar if you want in that case. Okay, because I'm also tracking potential opportunity for dollar yen. Here on dollar yen, I'm looking at a very similar structure to the S&P 500, expecting a free wave decline down to area of a former wave 4. Let me show this here. Former wave 4 here on the 1 hour chart is identified at 122.90. Okay, so this is ideal support for longs, and I will be looking at this area. Also, not to mention this daily technical chart, I'm looking here. As you know, I'm always tracking a 50 period moving average. Just let me move these lines here. So 50 period moving average is this one in yellow, okay, which is around 123. Okay, so very close to this former wave 4. So this would be ideal zone for a continuation to the upside. Okay, also if we project again and for wave C, you can see that we come out with equality level at 23.20. Okay, so actually ideal zone for a bounce would be from 22.90 up to 23.20. Okay, so any impulsive reaction from this region could be signaled that dollar yen completed a correction, that we are going higher. Obviously, I'm looking for a move to new highs here. Now I have received some emails why I'm tracking in fifth wave, which is a black wave 5. I'm expecting a free wave substructure. Answer is very simple. It's because in diagonals, okay, which are placed in fifth waves, okay, or wave C, the structure is free, which means free wave structure in each leg. So here in wave 1 we had a free wave structure. Here in wave 2 we had a free wave structure. I could also label here in a wave 3 a free wave structure. Wave 4 was maybe a complex correction or a free wave structure, but still it was a corrective wave, of course. And obviously I'm expecting a free wave structure to be shown in wave 5. Okay, but all in all, this is not important. No matter if you're tracking some different wave count, the important is that Elliott wave structure waves are to identify the right direction of a trend, not to be correct with the wave levels. Now this is very important. Sometimes it's not really important how you label the wave, the substructure of one particular wave. It's important in which direction you're looking at. It's important that your price is confirming that we are going in this direction. It's important to keep an eye on a daily close price, on a daily candlesticks, maybe on a weekly candlesticks, to show you where is momentum. Is it bearish or is it bullish? So in that case, no matter if this is an expanding diagonal or maybe my count is wrong, I'm looking higher because this decline was clearly made in three waves. So if you take a look on this 4-hour chart, there is no way to count this pullback from 126 to 120.40 in impulsive fashion. Okay, so I see this as a free wave structure. I see a broken channel to the upside. I see impulsive rise. So all in all, this signals to me that we are going to higher levels, no matter if this is a wave B of a fifth wave, or maybe it's a wave or some other pattern in action. But in any case, we think that market should continue to higher levels. Okay, so that's what really matters when it comes to Elliott waves. Okay, it's about following the trend. Okay, not to be the correct with each subwave in each structure. Okay, so traders, that's it for me for now in this video. We'll watch Euro very closely, while the German DAX and the S&P 500 and also dollar yen are headed to slightly lower levels. So talk to you later, and we'll catch you in the chart room with new charts and on the intraday page as well. Have a good day. Bye.